I'm Matthew Galgani with the IBD stock analysis for Friday, September 12th. Today we'll look at Illumina, a leader in the field of genetic test equipment. Its technology is a major reason why genomic testing has become much more affordable in recent years. Illumina is currently on the IBD leaderboard list of leaders near a buy point, and as the markets team noted in their backstory on the company, Illumina's importance to the industry could be set to grow even more. That's thanks to a new initiative to develop standardized FDA-approved kits to improve cancer diagnostic and treatment decisions. Illumina's sales growth has been solid and steady, ranging from 21% to 29% over the last 8 quarters, and revenue gains have moved higher in the last 2 reports. Earnings growth has also been on the rise, accelerating from 7% to 33% over the last 2 quarters. For the full year, analysts expect EPS growth of 27%, followed by a 24% gain in 2015. Estimates for both years were recently revised higher. Illumina has a solid 18% return on equity and a strong 25% annual pre-tax profit margin. That, plus the steady sales growth we saw earlier, helps it earn an A grade for its SMR rating, which tracks sales, margins, and ROE as a whole. Overall, Illumina sports the highest possible 99 composite rating and a B accumulation distribution rating. While the number of funds that own the stock dipped slightly last quarter, 4 typically better performing funds still report a position in Illumina: T. Rowe Price New Horizons, Invesco Midcap Growth, Franklin Growth, and Fidelity Contrafund. After a sharp decline beginning in July 2011, Illumina's chart started to show healthier trading as it formed this long base-on-base consolidation starting in February 2012. After breaking out in April of last year, the stock rose as much as 220% in just 11 months. It then pulled back to form this cup with handle. You can see how the tone of the chart changed at that point, from the tight, controlled trading of earlier months when it consistently found support along the 10-week line to the choppier action you see in this space. Illumina eventually got back above its 10-week line and broke out in June, but it failed to gain any significant traction. It's now working on another cup with handle. One quick note on the base count. Technically, these 2 formations count as a first stage base on base. That's because back in October of last year, the stock undercut the low in this earlier formation. But you shouldn't ignore the fact that Illumina has already made a huge advance in recent months. So while the latest base may work, be sure to take defensive action if the stock breaks out but then reverses. On the daily chart, here's the prior cup with handle and the current pattern. Note how the stock triggered a sell rule when it fell more than 7 to 8% below the earlier 178.29 buy point. Although Illumina has since bounced back, at the time you didn't know what would happen next. And that's why you want to cut all losses at no more than 7 to 8%. If the stock bounces back and breaks out of a sound base, you can always buy it back. And if it keeps heading lower, you'll be glad you protected yourself. The latest ideal buy point is 182.37. 10 cents above the peak in the handle. See if Illumina can push past that buy point on volume at least 40 to 50% higher than normal. On this week's radio show, Amy Smith and I will take a closer look at recent and upcoming IPO stocks, including GoPro, Mobileye, El Pollo Loco, and the big buzz new issue set to debut next week, Alibaba. We'll also go through some basic guidelines on what to look for in a new IPO before you buy. For details on how to tune in, visit investors.com/radio show. That's the IBD stock analysis for Friday, September 12th. Thanks for watching.